See? All right, good morning, traders. Today is February 6, 2026. My name, Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. That is the day trading division of the Hit and Run Candlesticks family. Thank you, everybody out there. I want to thank all my paying subscribers. I mean, you guys help keep the lights on. Thank you so much. Try to provide actionable, profitable content every day. All right, so thank you everybody out there in podcast land, digital land, cyber land. Thank you for following my content, liking my content, sharing my content. Big shout out Bob Jordan, John Jordan, Kathy, Sarah Roasted, everyone that helped spread the good word out there on the World Wide Web. Love that. Appreciate that. Don't take that for granted. I thank you every day so much. Thank you. All right, let's drill down. I got one announcement. Got an open house coming up on February 9th and February 10th, 8 to 4 p.m. Come learn my basic system. If this is your first time seeing this, you can take your smartphone, scan the QR code that will pop up a registration link in your browser. Fill out the registration. We will email you credentials. Check your spam folder if you do not see your credentials in your regular mailbox, okay? So take your smartphone, turn the camera on, scan that. That'll produce a pop-up, and then you fill out the registration page. All right? I will link a link in the description of the video as well. All right? So you can get registered and attend. It's a 2-day workshop. All right? So hope to see you all there. All right, let's take a look at the market today. Well, yesterday and this morning. All right, so my SPY pivot this morning, big dip yesterday. 679.80, above it I'm a bull, below it I'm a bear. 4 of the Fab 5, all right, that would be SPY, FNGU, IWM, QQQ, all made lower lows, lower highs, closing under bearish traps and under their 17 EMAs. So they're coming down. Diamond Dow made a lower high and a lower low, closing under a bearish cross and under the 17 EMA. Just remember, Diamond Dow, I think it was 3 days ago, put in a new all-time high. Okay, so SPY closed with a 2-hour downtrend, 10-minute downtrend. Silver lower low, lower high, closing under the bearish trap under the 17. Gold lower high, lower low, closing under a bearish trap under the 17. USO still in an uptrend, made a lower high and a lower low, closing inside a bullish trap over the 17. Hey, USO having a fantastic month this month. Let me just say, it's been a while since they've been up in the bullish, upper third of the quad line. So nice work on the USO. Big question is, can they hold it? All right, got to hold that higher ground. All right, UNG made an outside day. It's a higher high and a lower low, closing inside a bearish trap over the 17 EMA. US dollar index still in a downtrend, but not moving down. It's closed near the 97.95 area. SPY max pain for today, 681. Put to call ratio of about 2.2 puts for each call that expires today at 4:15. Security options expire at 4. Index options expire 4:15. If this is your first time seeing this page, all of these under the Bulls column or the Bulls title, all right, are all in uptrends over the 17 EMA. Those are daily uptrends over the 17 EMA, not 10-minute charts, okay? Daily uptrends over the 17 EMA. So those will be, look for these for swings, okay? On the bears, all right? These are all in daily downtrends under the 17 EMA. So they're in downtrends. If they got a little star over here, they're building out a bull flag or a launch pad from which to launch higher. If they got a little star on this side, they're building out a platform or a bear flag from which to dive lower, all right? So uptrends, downtrends on the daily charts. Take a look at the market. Start off with the SPY. All right, let's pull up the 10-minute chart, see what happened. Got a 10-minute, see the sticks? Let me give you the lay of the land, all right? So these yellow line, that's the 3 EMA. The white line, that's the 8 EMA. The burnt orange line, that is VWAP. All right, VWAP starts out brand new every day. So you can see the lay of the land here. We've got on the 10-minute chart right here, we got the sticks in the 3 riding underneath the 8 EMA. And you can see both of all 3 riding underneath VWAP and the 17 EMA. So 10-minute into the close yesterday, 10-minute downtrend into the close on SPY. On the 2-hour chart, okay, same deal. Got the sticks in the 3 riding underneath the 8 EMA. You can see they're both pointed down. You got a opening right here, so you can see we have a bearish downtrend on the 2-hour chart. On the daily chart, we have a low. We made a lower low, so we're now in a downtrend. You can see here yesterday's candle for the SPY. On the daily chart, lower high, lower low, closing under a bearish trap because the 3 is under the 8, under a bearish trap, under the flat 17. That's these green dots that turn to red when price goes under it. Okay, so this is under a bearish trap. If we look at this with the quad lines on there, all right, and you know what? I'm going to pick up a cleaner chart. I'm going to put the quad lines on that. All right, so here you can see we're up in quadrant 4. So if it's in, see the above the crosshairs, if it's in the upper third of the quad lines, that's bullish. If it's in the lower third, that would be below the crosshairs. Okay, that would be bearish. Okay, so we're still bullish up here. All right, but we're not moving up. Okay, we're kind of moving down right now. Okay, and we made a lower low, so we're in a downtrend. We're still up here. We're still bullish. All right. So we're in a downtrend, but still bullish up here in the middle of quadrant 4. Okay. There's SPY on the daily chart. Weekly chart, still bullish and in an uptrend. Monthly chart, still bullish and in an uptrend. Take a look at it on the game plan. That'd be on the 15. Let's scrunch this right here. Pull this over. Okay, so you can see this is the all-time high anchored VWAP. Let me crank that up. Move it up. Move it up. Crank it up. There we go. Okay, so 679.80. Above it, I'm a bull. Below it, I'm a bear. That's my pivot this morning. Okay, red erases green underneath 675.75. Green erases red over 682.65. Okay, I like and I trade 7 DTE and 14 DTE Friday options. All right, this will change every day or every trading day. Okay, just happens to be that today's Friday, so 7 days from now will be the next Friday. So I trade 7 and 14 day Friday options on the multiple of 5. I like them specifically for the open interest. I like a lot of liquidity. I want a tight bid-ask spread. And I want very little slippage when I get stopped out. I like the strikes that are $2 to $15 out of the money, okay? Now, I'm not opposed to trading in the money options, all right? I'm just saying they tie up a lot of my risk capital, okay? Not opposed to trading them, all right? But they will tie up a lot of your risk capital if you only want to lay out certain amount of risk capital when you trade, okay? So if you trade in the money, you will tend to tie up quite a bit of it. If you trade out of the money, not so much. And for that, I like to trade the out of the money options because they tend to capture or maintain. They require a lot of capital up front to the out of the money require less capital, all right, or risk, all right, for me to get into those as they would on the in the money options, okay? So for that reason, I choose out of the money options, okay? But again, I'm not against trading in the money options. You're welcome to trade them, and they will give you better performance than what I get. I'm just willing to sacrifice some of that performance for a little less risk. Okay, that's the reason I choose that. Same with the 7 and the 14-day DTE options. All right, I like the zeros because they tend to offer more action, all right, than the 7 and the 14 days. All right, I kind of like the action coming off of the 0 DTEs much more than the 7 and the 14. And there's plenty of liquidity in the zero DTE option, so I don't have to worry about what strike I choose on those. Okay, for that reason I choose the zeros. Okay, not a real big fan of the ones, but let me just say after 2:30, when the decay is going on real heavy on the 0 DTEs, I sometimes flip out to the 3s. Today's Fridays. To the 1 DTEs or 1 day till expiration. Today's Friday, so I got ahead of myself. You would probably choose the 3 DTE because those expire on Monday. All right, so I like 10-minute uptrends over VWAP. I like 10-minute downtrends under VWAP. If you want to know what an uptrend or a downtrend looks like, go to the 10-minute chart, pick up a clean one. Okay, you can see the sticks. And the 3 are underneath the 8, and you got all 3. Okay, the 8, the 3, and the sticks riding under VWAP. So that's a 10-minute downtrend right there. Okay, I like it when the 3's pointed down and the 8's pointed down, and the candlesticks are riding right on top, right underneath the 3. All right, if it was an uptrend, I would like it when the sticks are riding on top of the 8. So they're riding underneath here, so that's 10-minute downtrend right there. Okay, but I like it when the trend is moving down. See how these are pointed down? These are kind of flat right here, and you can see price did nothing but consolidate, over to the right. See how it moved down and then over to the right after the noon hour. Okay, just over to the right there. So that's just consolidation on the SPY. I like it when they're pointed down. Okay, that's where the action is. That's where the money can be made. If I've got 0 DTEs and price action just moves to the right, all that does is just decay my option value, and I wind up losing money on that. So after the move stops moving lower, all right, it's kind of best to close out the rest of your options and wait for the next trade to set up. Really, that's the optimal way to take care of that, especially if you're trading 0 DTEs, because once they start to not move down, all right, they just start decaying right there. All right, they just start moving back to 0, especially if they're out of the money. Now, if they're in the money, not so much, but on the out of the money, yes, okay, because you're nowhere near the strike price, and the chance of them closing underwater or otherwise not above the strike price, all right, then that's pretty kind of rare. So unless it just continues, the trend continues all day. So for that reason, it's kind of best just to close them out, because you're number one, you're not in the money. If they did happen to trade and they got down to a point where they were in the money, wouldn't be necessary to trade and close them out, because you'll still get some decay from here to here because price isn't moving down. All right, but I'm just going to say, it's just they're in the money at that point, so they're kind of like locked in. But when the out of the money, or once they stop moving down or up, either way, okay, all you're going to do is get some decay from those. Okay, so it's kind of best just to close out those zeros. All right, so back to the game plan. All right, again, I showed you. If I get a 10-minute uptrend that happens to manifest down here, okay, I'm interested trading it to the upside. I just like to see it break that bullish 10-minute rubber band candle. I like the 10-minute downtrends. I'm not opposed to trading 10-minute downtrends if they happen to manifest up here. Long before the green erases red, red erases green down here, okay, before that entry. Just like to see them break the bearish 10-minute rubber band candle. Okay, so there's SPY on the game plan. QQQ has a game plan as well. All right, and QQQ, green erases red over 603.10, pivot 658.55. Red erases green 594.90. Okay, so price below 594.90. Okay, so we're no longer in the 600s on QQQ. Not liking that at all. Sam I am. All right, QQQ game plan. All right, again, 7 and 14 day DTE Friday options, multiple of 5, specifically for the open interest. Strikes $2 to $15 out of the money. Again, preferable. Okay, because I don't have a lot of capital I want to risk. 10-minute uptrends over VWAP, I love them. 10-minute downtrends under VWAP, I love them. All right, same thing goes here. If one were to manifest downtrend up here, okay, long before the red erases green, the green erases red, excuse me, long before the red erases green, okay, I'm not opposed to trading it. Okay, so there's QQQ. We'll take a look at this on the 10-minute chart. And this is the 10-minute chart. And let's pick up a clean one. All right, let's zoom in here. You got the sticks and the 3 riding underneath the ADMA. 10-minute downtrend coming into the close yesterday. 2 hour, see the sticks and the 3 riding underneath the 8. 2 hour downtrend coming into the close yesterday. Daily chart, lower high, lower low, closing under bearish trap. Okay, underneath the flat 17 or the wavy 17 up here. That's QQQ. With the quad lines on it, you can see still in the middle of quadrant 4. So we got a low, we made a lower low, so we're in a downtrend, but we're still bullish up here in the middle of quadrant 4. Okay, there's QQQ. Okay, weekly chart, you can see still bullish and in an uptrend. Monthly chart, still bullish. See all the green dots? Still bullish and in an uptrend on QQQ. Let's take a look at IWM. Lower high, lower low, closing underneath, bearish trap underneath, flat 17 underneath, all-time high anchored VWAP, middle of quadrant 4. They haven't. We could call this a downtrend based on the fact that they popped up here. It's not much of a peak. You could call this a downtrend, or you could wait to get down here, okay? Because they actually did come down, and then they popped up, and then they came back down right here. So you could call it a downtrend. For me, it looks like one fluid moved down. All right, so kind of like to see them break this to be the downtrend. So you call it either way. Technically, you're right on either way because it moved up over the 17. Just really didn't make a more than a 2-candle peak or a 2-candle valley right there. Okay, so there's IWM in the daily chart. I'm going to call it a downtrend and in the middle of quadrant because everything else is in a downtrend. Just because in the middle of quadrant 4, all right, remember here's our April low, middle of quadrant 4, so that's still bullish but in a downtrend, not moving up, moving down. Okay, so let's take a look at Diamond Dow. Okay, remember Diamond Dow a couple days ago, put in a new all-time high right there. Okay, so yesterday's candles a lower high and a lower low, closing underneath a bearish cross, underneath the flat 17, clearly at the top of quadrant 4. All right, here's our April low, the origin of the rally. So that's bullish and still in an uptrend. Okay, on Diamond Dow. Let's take a look at Stinker. All right, Stinker continues to disappoint. All right, lower high, lower low, closing underneath a bearish trap, underneath the falling 17, underneath all-time high anchored VWAP, underneath the midpoint right here, almost getting ready to tackle the lower third. All right, so they were bullish. Now they're neutral. So they're neutral and in a downtrend, there's a low. They made a lower low. So neutral and a downtrend on the daily chart right there. Okay, so I did QQQ, SPY, IWM, did them all. Okay, let's take a look at silver. Silver, lower high, lower low, closing underneath, the bearish trap underneath, falling 17. On silver, this is still in an uptrend. All right, because they haven't broken any lows over here. So still in an uptrend. I don't think they made a high over the 17. So still in an uptrend, but not moving up. So it's neutral. All right, and still in an uptrend, just not moving up right there. So that's silver. Let's take a look at gold. Gold looks much better than silver based on the performance here. Lower high, lower low, closing underneath. Bearish trap underneath, flat 17s, that's bullish, middle of quadrant 4. Silver was neutral because it was in the lower third. It was in the middle third. Gold is bullish, it's in the upper third, so that's bullish. Still in an uptrend on gold. Let's take a look at USO. USO, nice candles. Yesterday's candle, lower high, lower low, closing in the bullish trap. Over the rising 17, still in the upper third, so that's still bullish. And in an uptrend, like to see that, holding those highs up there. Let's take a look at UNG. Okay, UNG got a, I'm going to call it an outside day. It's a higher high, lower low, closing under a bearish trap and under the 17 EMA, or right on top of it. Let's see what we got here. 17 is 1344 and the close was 1352, so over the 17. UNG is still in an uptrend. Okay, still in an uptrend right here. Okay, because they haven't made any lower lows. See, here's the all-time low. Okay, then they went off to make this high. All right, and they're in an uptrend. They're just not moving up right now. So there's price action for UNG. Now, they haven't broken any lows yet, so they're still in an uptrend even though they're not moving up. So UNG is down in quadrant 1. All right, if I show you the quad lines. Okay, so you can see there's the quad lines. There's the 2025 high anchored VWAP right here. So they're down in quadrant 1, so they're bearish and in an uptrend right now. And underneath this all-time high, a 12-month high anchored VWAP right there. So there's UNG. All right, let's take a look at technicals. T2101 should be 598.55. Let's go look at it. And QQQ, I think you're right. Yes, you're right. Thank you. 558.55. Yeah, thank you, Lenny. So, all right, that pivot for QQQ, 558.55, not 658.55. Little misprint on my part. Okay. Thank you, Lenny. All right, it's back to T2101. All right, and 15-minute chart. And market came down and participation came down. So I guess I kind of like that. I don't want to see people piling on when it's coming down. But I guess I kind of like that right there. That participation's dipping at the same time as the market's dipping. All right, that would be a bullish sign. All right, so that's T2101. But I think it just dips no matter what. Even if it was a bullish day, it still dips. All right, so T2122 right here. Okay, so we were up here in the buy zone. All right, aggravating the bears up here. After putting in a lower high, well, we came down to the seller's chop zone and just kind of meandered in here, hanging out in the seller's chop zone all day. So I kind of wanted to see us bull flag up here in the buy zone and maybe eventually melt up. I guess the only good news I can report is, see the low right here? Well, we made a higher low so far. That's a higher low. So that's looking a little bit better, but still a lot of room for improvement there on T21.22. T21.23 is a did they make a new all-time high? No, they did not make a new all-time high yesterday, okay? But they're near the highs. So we got a downtrend on T21.23.15 because we got a low and we made lower lows, all right? We're hanging out over the 200 SMA, all right? So that's bullish up there. And you can see the bull flag, price moves up, over to the right, moves up, over to the right. So still haven't filled this bullish gap. So that's bullish, all right? And the fact that the bears don't have the mojo to get that filled. So that's T21.23. Let's take a look at the same product, but on a 3-bar chart. You can see price moves up, consolidates on the 200, and then does another measured move higher to give you a new all-time high up there. So that is bullish and in an uptrend. T21.23. FNGU, here's stinker on the 15, and they got a low. They made a lower low, so they're in a downtrend on the 15-minute chart. And that's about it right there. So let's look at the economic package. And max pain is 681. Put to call ratio 2.2 or 2.3. All right, about 2.3 puts for each call that expires today at 4:15, and these are for the SPY options. So max pain 681. Economic calendar. Well, today we're going to have consumer sentiment at 10. A rig count at 1, and then consumer credit at 3. So really light day today. They did have the delayed report of the employment situation, but I guess they blew that off. Maybe it wasn't ready yet. Okay, on the earnings calendar, we've got Philip Morris going to report today, $280 billion. I got to make sure I get the right consonant at the beginning of that word. Okay, so there's $280 billion. Ubiquity, $33 billion. Again, they don't know when they're going to report, but anyways, the rest of these are nothing but familiar names, but nothing that's going to be market moving right there. And even Philip Morris probably won't even move the markets. All eyes are still going to be on tech. All right, we're in the middle of an AI boom, and all eyes will constantly, all year long, will probably going to be on AI and Bitcoin, unless things change. All right, I really see all the focus on being on Bitcoin and anything that has to do with AI and chip stocks. Okay, so tech always leads the way, so there'll be a lot of focus on technology throughout the rest of the year until this bubble bursts, okay? Well, we're not even in a bubble yet. We're just in a boom, all right? So there you go there for the earnings calendar right there. All right, so let's go take a look at the markets and see what we got this morning for the markets so that we can see how we're going to make money this morning. All right, so this is SPY on the 15. Let's take a look at it here. Okay, so here's SPY on the 15, and we have an uptrend line. All right, and I'm going to go out to the 1 hour. So here's our uptrend line, and all I'm doing is connecting these lows together. All right, so you can see we shot through. Now we're coming back to this uptrend line. So Right now, currently price, all right, on the 10 minute. See this on the hourly chart, you can see we're right at this resistance area. Notice we got underneath it before and it held right there. See how it held, and then we had a wave lower right there. Well, we're back at the same one again today, okay? Just like we were yesterday. The question is, can they get on top of it and hold the higher ground or do the whole gap fill thing? I don't know. All right, but that's what I'll be looking for. So it's going to be tough trading this morning with, you can see this is the green line right here. So, because the market's currently, see the 10 minute kind of bullish right there, right? So continuation of the 10 minute uptrend. So they're consolidating, and I got this rule for 6 10-minute candles, and you can see that they've been lingering here way more than 6, but that goes for the open market. I don't have a rule for the pre-market or the post-market. So right here, got that 10-minute trend going into consolidation. So I'm kind of not interested in trading this unless they get up on top of here, all right, and consolidate and show me they can hold the higher ground or continue moving higher. I either want to see continuation or at least a 6 candle hold on the 10-minute chart. So there's SPY. So for me this morning, it'd be a lot of sitting on the hands or just probably interlocking the fingers and just kind of hanging out here waiting to see what they're going to do with this. Because if we buy this and then it rolls over, well, what happens? We just wind up giving money to the market. So I'm not interested in that at all. Not interested in giving out money to the market just for nothing. All right. And then again, and if it gets on top and holds, well, that will be a little bit more promising than just going up and going back down all the way back to the base area here. So for me, it's going to be a lot of watching. Might not be any trades today. We're at 681 currently, and we got a put to call ratio only 2.2. It looks like they're just going to consolidate all morning, probably till, I don't know, 10:30, 10 o'clock. And maybe something will manifest then. Other than that, I'm just waiting for a breakout of this range. All right, so here's the range. Okay, that would be the bottom of the range right there. And then, of course, you got the top of the range right here. All right, so what is the range? If you want to know what it is 680.45 and 682.87. All right, for the range for SPY this morning. So I'm going to be waiting for a breakout of either one. Just keep in mind, on the upside, it could fail. It could fail due to, you got this downtrend line right here, which really belongs snugged up next to that. And this, okay, so that downtrend line is not going to be relevant right there because you can see we're up and above that. And then you've got the channel lines right through here. So channel lines are, looks like 680.45 and 682.85 or 87 right up there. All right, that's it for me this morning. I will see you guys in about 45 minutes, and we'll open up the markets and record them. All right, so be careful this morning. If you buy along, you could just get, be part of a whack-a-mole program back down to the downside. So probably just best to just sit on the sidelines and wait till a trend emerges to the upside or downside. I think our edge will be better on that. All right, so that's it for me. Everybody have a profitable day.